If you sell physical products in your business, whether that is the main part of your business or something that you offer alongside your services, you need to be tracking expenses that are directly related to having those products to sell separately from your other business expenses. This would be things like inventory purchased at wholesale, raw materials required to make your products, packaging and containers, but not those for shipping, just ones for like displaying the product, the cost of shipping the products or the materials to yourself, not to your customers, but to yourself, as well as wages that are directly related to producing the products so that they are ready to sell. You need to track these expenses separately because they aren't necessarily written off in the same year like most of your other business expenses. Instead, you add together the value of the stock that you had on hand at the beginning of the year, if any, as well as any of the purchases or related costs that you accrue during the year. Then at the end of the year, you subtract the value of the stock that you still have left to sell, if anything, and that gives you what the CRA calls your cost of goods sold for the year. We often call it COGS for short, or COGS expenses. If this sounds complicated, like so many other things in bookkeeping, it's really not so bad to track all of it once you have a good system in place. And lucky for you, the Canadian Small Biz Bookkeeping System already has a cost of goods sold sheet built into it, and it's ready to go. To get to your cost of goods sold sheet, you're going to scroll over to the right. It's right here behind December. And if this is a sheet that you use a lot and you find it kind of annoying to have it over here at the end, you can move it. To move any of these tabs around on the bottom, you just click and then drag it around wherever you want it to go. So if you would prefer to have this near the beginning, next to your P&L, for example, you can absolutely do that. To start, you're going to fill in your opening inventory. So that is the value of the inventory that you had on hand at the start of the year. If this is your first year in business, then that will be 0. If you are using this sheet for a future year, so you've already used the Canadian Small Business Bookkeeping System for a year, and now you're moving on to your second year with the system, you have this number that will be calculated automatically for you here in cell B10, and you can just manually enter that into B3 for your copy of the sheet for the next year. This is the only section of the COGS summary up top that you will update manually. Other than that, all of these other cells get filled in automatically. Now, if you're just starting to use the Canadian Small Business Bookkeeping System midway through the year and you didn't really have a system set up last year and you don't know what your closing inventory value was, then you're going to have to do a little bit of detective work and come up with your best guesstimate on what that was. Try to come up with that number based on what you have now and what you had sold so far this year. And now that you are using the system, I promise that this whole process will be so much easier moving forward. Where you will be doing most of your work on this sheet is down here in the purchase log, starting on line 14. Anytime that you buy inventory or the raw materials to make your inventory, you're going to want to log that down here. You're going to enter the date in this column. You will select product or material for the type of expense. You're going to want to note down what the supplier is, so what company you purchased from. If you want, you can add the invoice number, then note what type of product or material it was, and you can optionally add the SKU if you want to. Now, you want to put just one type of product or raw material per line. You're going to want to note how much you bought of each one of them, how much each unit cost you, as well as if you got any discounts, for example, for a bulk purchase, or maybe you ended up returning a few of the products because they were defective. You'll also want to note shipping, any sales tax that you paid, and then you can put the link to the invoice or the receipt from the company here. So let's say you place an order from a particular supplier where you purchased multiple products from them on that one order. Here is how I would handle it so that we just have one item per line. You'll see this filled in automatically. Let's say we got a discount. So that'll take my net cost down automatically. This is also calculated on its own. You don't have to fill that in. Now, how do we handle shipping on an order that had multiple products? So let's say that in total, this company charged us $75 in shipping. I'm gonna have 3 items that were on that order, so I'm just gonna divide it by 3. So it'll be 25 for this one. And then for sales tax, and then I would link up the receipt here. So you grab the link from your cloud storage platform and then you could just paste it right there. So that's one product. That's number 2. And last one. Last one. So that's how I would do it. So all 3 of these are from the same order, but I've added them 1 product per line. And the reason that we do it this way, 1 item per line, is so that when we go to do the year-end inventory count, we can go line by line and see how much we have left of each of these products. For example, we did our year-end inventory count on the 30th of December. So this was our tote bags. And let's say out of the initial 100 that we purchased, we have 20 left. So these were $4 each. And then over here, we'll get our ending inventory values. These numbers here get added up and reported right here. So at the end of the year, you want to see how much you have left of everything, what your value is left on hand. That's what it is right there. And then I'll do the same for the other ones. Add 1 of those left. Let's say I sold that one out. So then you can see what's left is 0. So for this one, where I actually sold out of all of my original purchase, let's say that I actually made a second purchase mid-year. Well, I would just add that on another line and then record how many was left over of that order at year end. So let's say I made another purchase in June. Let's say I bought another 10. Let's say the shipping, they had a special. It was only $15 this time. And then I'd link up the receipt here. I don't have a second sample receipt, so I'm just going to skip that for now. And then when I went to do my year-end count, I just add this one right over here. And let's say I had 4 left. So now when I go to do my year-end filing, I can see this number has updated and this is the value of what inventory I have left over at the end of the year. I started with quite a bit of inventory. I made some purchases throughout the year, but I sold a lot of it. So this is what I have left on hand at the end of the year. And this number down here, our cost of goods sold, this is taking what we had on hand, what we purchased, some other expenses that came up, such as wages, and we'll get to the other ones. We'll explain these ones in a little more detail in a moment. Shipping, and it added all of that together, which gave us that number minus this number. So subtotal of our opening inventory plus all of our expenses that occurred during the year, minus what we had on hand at the end of the year. And that gives us this, which is our cost of goods sold for the year. So what about costs that aren't just purchasing products or purchasing materials to make products? Let's say you get like a really big rush order and you need to hire a friend to help you out for a couple of hours to help you with making the products, labeling them, things like that. Because that is a cost, the cost of hiring your friend to help with this rush order, to help make the products, that is a cost that is directly tied to having a product to sell. So because of that, that will get reported here on the cost of goods sold sheet rather than under your other business expenses. Something that wouldn't get recorded under cost of goods sold is something like hiring somebody to help you out with your website. Although your website does help you sell your products, it is not directly tied to you having products to sell. So therefore, it is not a COGS expense. To record something like wages, I would do it like this. So we put the date like normal. This time, instead of product or material, you're going to select wages. And let's say it's your friend that you hired before, Susie Q. You probably won't have an invoice number. And for the product or service, just say like generally what they helped you do. Let's say 1 day labor at 8 hours, 25 per hour. There won't be a skew. And then for the quantity, this will be how many hours they work for you. So in this case, it was 8. And then the service cost was 25 per hour. So you'll put 25 here. And then that will give you your subtotal. And that will get added under wages up here. So now this is updated to $500. So you can now see that our cost of goods sold amount for the year has also increased because I added this expense on. Now, there are 2 other options under the type of expense here. One of them is subcontract. And Most small business owners probably won't have anything to report under this. If you outsource producing a part of your product to another business, then the expenses related to that could be recorded here as a subcontract. So for example, let's say that you grow your own flowers and herbs that you use to create essential oils that you use in various skincare products that you produce and sell, but you outsource actually turning those plants into essential oils to another business in your area. So you get them to do that part of the process for you. So what that business charges you would get recorded here as a subcontract. And then other is what it sounds like. It's anything else, any other expenses that don't neatly fit into one of these three categories. I don't have an example for you guys in what that would look like because in my years of bookkeeping, I have not yet come up against one. If you think you have one for your business, let me know. I'm super curious to hear about what it is. So for the COGS sheet, I recommend keeping on top of this regularly and recording your purchases and other expenses regularly throughout the year. And then obviously your year-end inventory only needs to be done once. There is one other thing I need to explain on here. You may have noticed under the year-end inventory that there is this section for fair market value. What is that? Well, let's say, for example, you purchased some stock of an item that was really trendy online, but was very difficult to get at the time. The wholesaler that you purchased from was charging $80 a unit. However, since you purchased, the item has now become a lot less popular, or maybe a cheaper alternative became available and has now flooded the market. Now, the same product that you paid $80 a unit for is only worth $40 a unit. And the amount that you can sell it for, like that you can charge your customer, has been cut in half as well. Let's just put that example on here so we can see it in action. Okay, so let's say you bought 200 of them for $80. You didn't get any discounts. Let's add some shipping. Let's say that was $100. And let's say you actually didn't pay sales tax on it. You purchased it from outside of Canada. So for this one, when we go to do our year-end inventory, we're going to handle it a little bit differently. So you're going to start out like normal. Still going to put what it is. If you want, you can add the SKU. Let's say you still have 50 of these left. Now, originally you had paid $80 for them, so that puts your cost value at $4,000. But now you can only sell these for $40 a unit, so you're going to put that there. So now the system's going to automatically take the lower of these two numbers here. So you want to record what it was originally, but then, you know, if something happens and you definitely can't sell it for that amount, then you're going to put that lower amount here, and the system's going to decide what number it should use. It'll take the lower of the two, and then that means it's going to use this for its ending inventory value instead of this. So if you still have inventory at year end, you can actually write off that loss here in the value of your inventory by recording that fair market value at the time of your year end inventory count. So because the system will use the lower of these two, it will automatically calculate that $2,000 loss into your cost of goods sold up here, which you can see. You could also use this in the event that something bad happens and your inventory is damaged and cannot be sold anymore. Let's say that there was a flood where you stored this inventory, everything got damaged, and now it's completely not sellable. So in that case, you'd put 0, and then you'd write off the full amount. So you can see that number's gone up now. Big asterisk on the fair market value markdowns. You must provide detailed documentation to back up the fact that your products are no longer worth what you paid for them. So if they're damaged, you need photos of the damaged merchandise and an explanation of what happened. If they've gone down in value, then you need to be able to prove unequivocally that they have gone down in value. You could use screenshots from your wholesaler's catalog, prices from your competitors' websites, market reports for trendy or viral products that are no longer as trendy or viral, stuff like that. A question that typically comes up at this point is, do you need to record COGS expenses on your monthly overview sheets? Technically, no, you don't have to. All of the information that either your accountant or yourself will need to complete your tax filing is on the COGS sheet in the Canadian Small Business Bookkeeping System. However, I 100% do recommend that you also record your COGS expenses on your monthly overview sheets because they absolutely do affect your business's cash flow. I just think it's important to be able to see that on your P&L sheet. As a business that sells products, it is very normal at the beginning and periodically to be cash flow negative due to purchasing inventory. You are investing in being able to make future profit. But if you are cash flow negative most months or every month due to purchasing or producing inventory to sell, that's something that you need to know. That's information that you can act on. Once you know that, you can work on correcting that by maybe looking into lower cost suppliers, or maybe you need to raise your retail prices. I know I harp on this a lot, but this is the real value of having a good bookkeeping system in place that allows you to clearly see how your business is doing financially throughout the year. Yes, it's nice to get to March and just have a document ready to hand off to your accountant with very little stress, few to no follow-up questions, but being able to get this kind of insight into how your business is doing financially year-round is absolutely vital to long-term success. I have seen too many burnt-out business owners get to the end of the year, work on their tax filing, only to find out that their business had very little profit or none at all, and then they're absolutely devastated. Heck, I have been one of those business owners in the past. It's not because they are bad at doing business or that their business wasn't good. It's just that they did not have a system to work with that is specifically designed for Canadian small businesses that takes everything into account, and they just really had no idea what was going on. So that's why I built this system and why I feel so passionate about how it can be an absolute game changer for business owners like yourself.